Utilizing the Cybertruck coming up soon. I thought we could look into the economics of this kind of vehicle, especially in comparison to the competition, and why the Cybertruck will be so much better than anything else on the market today, for the rest of this decade or probably even longer. When the Cybertruck first goes into production, it will probably have a reasonable impact on overall margins, because there will be some significant upfront costs. But these can be spread out over the 4 other factories that are operating at least at volume production, as well as the Model Y factory in Texas. Them, and I believe that gross margins may decrease by a few percentage points after the Cybertruck begins its minimal production. This is not surprising, of course, since we already know that a modern low-producing Tesla factory is a money pit. We have also been informed that there will be a slow ramp associated with this new product line, meaning that the cost of goods sold will rise significantly. This production line may be Tesla's most expensive, as it produces larger vehicles than the others. But it doesn't have a paint shop or other innovative manufacturing techniques, so it might not be all that bad. Besides, it's not like when Berlin and Texas were both online at the same time, producing insignificant amounts, with only Shanghai and Fremont to support them. Tesla's current size is larger than it was in Q4 of last year, but it will still be worthwhile if we see Cybertrucks coming off the line. We've been told to expect around 50,000 Cybertruck units by Q4 of 2024. With expectations of the production line reaching around 350,000 most likely in 2025. This is a serious production line designed to get costs as low as possible, with massive amounts of capital expenditure involved. In manufacturing, there is a trade-off. Spending more on capital expenditure to lower the cost of goods sold is only justified if higher quantity is achieved. This is what economies of scale are all about, as well as balancing supply and demand with the appropriate price. The economies of scale Tesla has achieved is arguably the biggest barrier to entry when it comes to EVs. No one else can get their costs down low enough, or their supply as high as Tesla. Compare this to the Model S and X lines. However, the higher the quantity, the more economies of scale you reach, thus able to get costs lower to hit the lower price points to reach that demand. Obviously, there's less automation, there are no Giga presses, for example, basically lower capex. But as a result, the cost of goods sold is higher. However, the prices of these cars are so high they can be justified. There isn't enough demand to build a production line that could make 500,000 Model S and X's a year. Although if Tesla did do that, then of course, the cost would come down further, which would increase demand but may not still hit the market clearing price. It's all about getting the correct balance. As a result, the Sex lines are profitable with probably as few as about 1,000 units a week going through, maybe even fewer than that due to the massive amount of gross profit margin each of these cars carry. These are special unique cars and are in smaller supply, so can justify a higher price tag to obtain these margins. Now the subject, of course, is also a special unique vehicle, and it's not going to be cheap either, at least likely quite a reasonable discrepancy between the initial advertised prices and what it will actually cost when launched. However, the difference between the Cybertruck and the Sync is consumers are paying for utility rather than novelty features like falcon wing doors or neck-breaking acceleration. Not to mention the sheer size of the Cybertruck demonstrating where the additional expenses are going. It's not so much a rich person's toy, but more a product that people are willing to spend more on because they justify the improvement in their standard of living and can quantify the value. And right, sure, it's also a rich person toy in many ways too. However, like we're saying, the Cybertruck is trying to appeal to a much larger market segment than the Model S and X. Put it this way, there's no $100,000 Ford SUVs or luxury sedans, but a Ford F-150 Raptor, stuck to almost $80,000, so this is a comparable price for Ford, and I'm fairly sure that Tesla will have comparable performance, or more than likely significantly faster acceleration with additional motors, and sure, the Ford F-150 can also start in the mid-$30,000 mark. But the F-150 Lightning starts at $60,000 currently, and we can only imagine how much better the Cybertruck specs are than that. I kind of think the Cybertruck will start around $80,000. And this might be a tri-motor with just over 400 miles of range, which is nearly twice the range from a Lightning. I think the initial price tag will need to be that high in order to get decent margins to cover some of the cost of this manufacturing when we're in low quantities. Although the Tesla community is still arguing over whether the Cybertruck will launch with 4680 cells that mainly produce under 300 miles of range with a dual motor Or maybe a 2170 battery that could produce over 400 miles of range. And like I'm saying, Tesla have gone the capex-intensive route with a Cybertruck because they intend to produce roughly 4 times as many units annually as the S and X combined. A significant difference. However, this capital expenditure entails significant overheads, so even though Tesla can break even on less than 1,000 S and X units per week, it will take much longer for Tesla to pay for the Cybertruck line. Keep in mind that the price of the S and X is still high, the S starting at approximately $90,000, and the X starting at approximately $100,000. I'm not sure how much Cybertruck Tesla needs to sell to break even on this line, but I would guess it would be about $20,000 per quarter if prices are in this range, assuming Tesla was correct about how they could bring down the cost of these vehicles when they first revealed that they only start at $40,000. Looking back, that seems way too good to be true. Based on another estimate, I wouldn't expect that we will reach this break-even run rate until roughly Q2 or Q3 of 2024, assuming everything went relatively well, and we didn't encounter some kind of new production hell. Tesla has pre-orders available now though, and has tested their demand. When compared to the Sense line, which has limited capacity, Tesla is confident there will be plenty of demand minus 30,000 units or more annually, and can justify this kind of capital expenditure to get the quantity this high, because eventually you get economies of scale, which is the whole point of it. This is because, thanks to economies of scale, the incremental cost of an additional unit doesn't require any more capital. There are certain fixed expenses associated with the production line. One of Tesla's primary advantages is their ability to increase production lines to previously unheard of run rates. This allows them to produce much more from the same footprint than their competitors, which lowers costs and boosts economies of scale. We hope and expect that much has been learned since the Model Y, but the Model Y in Texas and Berlin lines was still designed around a Model Y that was initially built in Fremont, and the Model Y was really just an alteration to the Model 3. The Cybertruck will be Tesla's first production line. Since the Model Y, going back to roughly 6 years ago, the Cybertruck is a completely new design. Not only is a factory built specifically for that vehicle, but the vehicle design itself is also based on the manufacturing process that Tesla has learned. This explains why the Cybertruck has straight lines instead of curves, but it still has a fighter jet-like appearance, and is unmistakably different from anything else on the road. It also simplifies manufacturing, which is an incredible engineering feat that allows Tesla to produce such a massive vehicle in large quantities and enjoy significant economies of scale. This will be one of the primary goals for the conclusion of this article. The more complicated the engineering, the more efficiently the vehicle can be built, and, to a greater extent, which is why it will never be possible for anyone to match so much car for the money. Elon has set low expectations for initial production. The target is to hit an annual run rate of 200,000 a year by the end of Q4 if this is achieved. Then I think the market will be very happy. Elon has spent the last year and most of the next hoping that Tesla can scale the Cybertruck, and that they haven't been enough more than they can chew.